Perfect. Sorry for this technical issue. So thank you very much, Nyamala, for the introduction, and thank you for all the participants for being connected today. We're very grateful to be able to present to you this report, which is titled Biodiversity and Reinsurance and Ecosystem at Risk. So this report is divided into three parts. The first part, which aims at giving an overview of the scientific knowledge on biodiversity, on its dynamic, on the interactions with human societies, and on today's research perspectives. Then there is a second part, which aims at understanding how, what does biodiversity loss means for human societies. So, and this at 4 different levels, on the individual level, for businesses, for the financial institutions, and at the global economic level. And the third and last part aims at understanding for the reinsurance industry, how reinsurers and insurers are at risk from biodiversity loss, how their activities impact biodiversity, and what are their opportunities in addressing this environmental challenges. So the report is available online, and so now we'll be presenting the main finding in each part of this report.
Thank you, Jules. So to start with, what even is biodiversity? The scientists from the Muséum, Philippe Brancola, Coralie Martin, and Anne-Caroline Prévost explained it at length in the previous session. Biodiversity refers to the biological diversity, or the set of varied forms of life on Earth, which constitute the web of life. The concept of biodiversity encompasses 3 different levels of diversity. So you have the diversity of ecosystems, diversity of species, so plants, animals, fungi, or microorganisms, and the genetic diversity, that is the diversity of individuals within each species. This web of life provides the goods and services that are vital to human livelihoods and societies. Nature directly or indirectly contributes to and even supports human existence and well-being. We call these goods and services nature's contributions to people, which can be defined as all the positive and negative contributions that people obtain from nature. There are 18 types of nature's contributions to people, which can be classified under 3 categories. You have the regulating contributions, that is the contributions which are regulating environmental processes. So the contributions which provide the basics that support human life, like for instance, pollination or the regulation of air quality. And you might notice that the regulation of climate also is a regulating nature's contribution to people. You have the material contributions, that is how nature provides us with material goods, such as the food we eat, the energy we use, or the materials needed to produce medicines. And you have the non-material contributions, which are the ways nature provides us with spiritual inspiration and learning. In addition, you have the last one, which is called maintenance of options. And this one refers to the capacity of biodiversity to keep human options open in order to support a later good quality of life. So how is this biodiversity evolving? You may have heard a great deal about the IPCC's reports on climate, while the IPBES, which we sometimes designate as the equivalent of the IPCC for biodiversity, published a comparable report in 2019. This global assessment report compiles thousands of scientific papers on the matter and provides us with an overall evaluation of biodiversity. And its conclusions are unequivocal. The scientific message is loud and clear. Biodiversity in all its forms is degrading at an alarming and unprecedented rate, to the point where scientists consider that the 6th mass extinction has begun. Indicators leave no room for doubt, and according to the IPBES, they overwhelmingly show net declines over recent decades. Of course, there are disparities in the extent to which geographic areas and systems are affected, but the overall trend is very clear. Here we show just one of these indicators as an example. This is the Biodiversity Intactness Index, which estimates how much originally present biodiversity remains on average across the terrestrial ecological communities within a region. So it is important to understand that this index is only one among a multitude of others. Biodiversity loss is about populations dwindling, but it is also about species extinction, community composition, and distribution. And for that very reason, it is virtually impossible to compute an index that would cover all aspects of biodiversity changes. No single indicator could ever cover such complexity. And there is no equivalent to the +2-degree target that we use in the context of climate change. And this trend is inevitably leading to declines in the nature's capacity to provide contributions to humans. So for the past 50 years, 14 out of the 18 categories of nature's contributions to people have been declining. The only contributions which have been increasing are the materials ones, so food and feed or energy, for instance. And so there is a clear dynamic in favor of the production of material contributions at the expense of regulating and non-material contributions. Taking a very concrete example, we increase the extent of agricultural land to produce food, which is a material contribution, by deforesting, so harming the capacity of nature to regulate air quality and regulate the climate, among many other benefits of forests.
So then, still in this first part, we wondered, why is there such a decrease in biodiversity, and where does this unsustainable dynamic in the production of nature's contribution to people come from? So we've introduced this conceptual framework that we've adapted from the IPBES to study the two-way interactions between biodiversity and individuals and organizations. So here in this first part, we'll be focusing on the dependent side. And the concept of nature's contribution to people really helps us to understand how individuals and organizations depend on biodiversity for their, not only their well-being, but also their existence. And to really understand how biodiversity provides us with these goods and services that impact our life, there's an important distinction to be done. First, there is the potential nature's contribution to people, which correspond to the capacity of biodiversity to provide us with these goods and services. So which corresponds to the stock. And if we take the example of food, it would correspond to the extent of agricultural land. Then there is realized nature's contribution to people, which are the actual flow of goods and services that humanity receives from nature. And here it would be the quality and the quantity of food produced. And last, there is the impact on good quality of life. And in this example, it could be, for instance, the reduced hunger. Another thing that is important to understand is that humans can intervene in this process of production of goods and services from nature. If we take the example of agriculture again, well, our demographic trends and our dietary habits drives a certain demand, and all our agricultural system interact with biodiversity to provide us with the food needed for our societies. Then we ask ourselves in the second side of this framework, what are the impacts of individuals and organizations on biodiversity? And how does human activities actually influence biodiversity? It is important here to understand that any decisions taken either as an individual or as an organization will eventually materialize into a tangible effect on biodiversity. And human activities can have either positive impacts, and we'd be talking about synergies, which means that a certain human activity would enhance the potential of biodiversity to provide us with a global range of goods and services. But human activities can also have negative impacts, and we'd be talking about trade-offs, meaning that a certain activity favors one good or one service at the expense of all other, and therefore reducing the overall potential of biodiversity to provide us with a full range of nature's contribution to people. Unfortunately, today there's a scientific consensus that tells us that human activities are responsible for the 5 main drivers of change, as Philippe Grandcola presented before. And these 5 main drivers of change are land and sea use changes, which leads to habitat loss and degradation, species overexploitation, pollution, climate change, and finally, the increase of invasive species and diseases outbreaks. And these direct drivers of environmental changes are driven by some indirect drivers, which corresponds mainly to our way of life, such as our consumption habits, our demographic trends, our governance, the development of some technologies, and even conflicts. So this conceptual framework really helps us to understand how we both at the same time depend for our life on biodiversity and have detrimental impacts on biodiversity through our activities. And it is really important to grasp this conceptual framework at different spatial scale, from local to global, but also at different time scale, from short-term to long-term. And so to conclude this first part, we want to insist on 2 main dynamics. The first one being that the harmful impacts of human activities have a cascading effect on biodiversity, but also on nature's contribution to people, and leading to this unprecedented loss that we've been presenting just before. The second dynamic is that because we both impact and depend on biodiversity, there is this feedback effect which initiates a vicious circle that threatens the future availability of nature's contribution to people, and thus the very future conditions of our existence. If I take the example of agriculture, in the last decades, the demographic trends, but also our ways of consumption, led us to the adoption of some intensive agricultural practices, which has had many trade-offs, such as the degradation of the quality of soils, and which are now impacting the potential nature's contribution to people for agricultural production in the future. To illustrate this, well, in the last 50 years, agricultural land has increased, while agricultural productivity has been declining in 23% of terrestrial areas. And the impact of this on good quality of life has not been all positive, because today our agricultural system fails to provide us with a diversified and healthy diet, and malnutrition has been rising since the 1970s, especially resulting in obesity.
So there's a vicious dynamic engendered, as Jules just presented. What does this mean for human societies? Well, this dynamic actually generates risks for humans, and risks that they must understand to ensure their survival and future well-being. And this is what part 2 is about. It's about the emerging threats that appear at all levels of our societies. The exposure and vulnerabilities are multiple at all these levels, and here we're only going to be presenting illustrations at 4 of these levels. Individuals are threatened by biodiversity loss, for instance, through rising health issues. Coralie Martin introduced us to this topic this morning. We're currently experiencing a pandemic that was likely triggered by the deterioration of nature's conditions. But zoonoses are not the only channel through which individual health is at risk from biodiversity loss. While it is well known that healthy diets are diversified diets, only 9 plant species account for 66% of total crop production, according to the UN Food and Agriculture Organization, the FAO. And unhealthy diets are underlying factors of the rise in non-communicable diseases, such as cardiovascular diseases or diabetes type 2, which the World Health Organization ranks as the most rapidly rising challenge to global public health. As for businesses, biodiversity loss can lead to operational disruptions with a reduction in the availability and quality of inputs, such as raw materials. This will be the case, for instance, for cosmetic markets with the reduced availability of primary resources, such as shea butter and argan oil. Businesses are also exposed to increased damages to infrastructures, as for instance, mangroves, which protect against coastal erosion and flooding, are damaged. And this business risk actually transmit along value chains and across whole sectors. Financial institutions are businesses, so they're exposed to the same types of risks, but their exposure is quite different as they're not directly engaged with biodiversity in their business operations. And so they're only slightly exposed to operational disruptions per se. On the other hand, as lenders, investors, insurers, or advisors, they are indirectly related to nature through the economic activities with which they engage. And they face a higher level of financial risks because the risks that their counterparties are exposed to are transmitted to them via investments, loans, underwriting, and advice. To illustrate such risks, the Dutch National Bank, for instance, estimated in 2019 that the Dutch financial sector had 96 billion euros committed to companies that are involved in environmental controversies. The combination of these micro-level risks could create vulnerabilities on the macroeconomic level, potentially destabilizing the whole economic system with impacts on international trade, regulations, interest rates, and geopolitical stakes. Modeling exercises have already reflected that. The Global Futures Project, for instance, has shown that the loss of nature in a business as usual scenario would lead to a drop of 0.67% in annual global GDP by 2050. And under the same scenario, the cost to the world economy would amount to $10 trillion by 2050. And these macroeconomic impacts would in turn have detrimental feedback effects on the financial system, businesses, and individuals. Once again, these are just examples, and our report goes into further details and provides further example on each of those levels.
So if biodiversity loss is certain and scientifically established, its consequences remain largely unknown today in terms of concentration, frequency, or intensity. So individuals and organizations are really facing a new type of risk, which can be called green swans in reference to black swans, which corresponds to a high risk and low probability events. Green swans and black swans share similar features. First, a deep uncertainty. As we explained just before, we're in an unprecedented situation and there's a deep uncertainty regarding the materialization of the consequences of biodiversity loss. Then there's a non-linear propagation because ecosystems are approaching tipping points, which once exceeded could lead to the disruption of the capacity of biodiversity to provide us with nature's contribution to people. There are also some significant externalities, as Marine just presented. Human lives are at stakes, but also the lives of other species and our global economic system. Then green swans have specific features which make them even more complex to cope with and to apprehend. First, they're characterized by a high degree of certitude of occurrence. As we've been saying, there's a scientific consensus about the fact that biodiversity loss is happening at an unprecedented and alarming rate. They're characterized by an extreme scope of impact because of the interconnectedness of ecosystems and between nature's contribution to people, but also with the interconnections to our societies. They're characterized also by a higher degree of complexity because as of today, we still do not understand all the ecological interactions. And as Philippe Grandcola was explaining before, we only know 20% of the biodiversity. And last, it is also characterized by a potential irreversibility because once lost, biodiversity with all the goods and services it provides might never be able to recover. So the second part of the report really points out the unprecedented consequences of biodiversity loss at all levels of the society. And despite having close to zero direct interaction with biodiversity, insurers and reinsurers are exposed in several ways. And so the third part of this report really focuses on the interactions between the insurance and reinsurance industry with biodiversity. So here we'll be talking about both insurers and reinsurers, so the insurance industry at large. And we'll start with the risk, how insurers and reinsurers are at risk from biodiversity loss. So because our lives and economies are embedded within biodiversity, and that the insurance industry engages with most economic actors, but also with individuals, insurers and reinsurers will be affected by biodiversity loss. Just as other businesses, they will be exposed to physical and transition risks. Physical risks corresponds to the direct physical impact of biodiversity loss, such as the flooding of an insurance company's buildings. But you will understand that for the insurance industry, it is a very low exposure as they have no direct business operations linked with biodiversity. They will also be exposed to transition risks, which arise from the lack of adaptation to these physical risks, but also the lack of adaptation to the associated societal response. So here we can take the example of reputation risk for an insurance company, which has some investments in a company involved in environmental controversies. And last, there is a third category of risk, which are transmitted risks. These risks are, so reinsurers and insurers are exposed to transmitted risk through their policyholders and investees, which are themselves exposed to physical and transition risks, which are then passed on to insurers and reinsurers. So to give some illustrations, in the case of underwriting activities, because of the very nature of biodiversity-related risks, which are, as Denis Kessler told us this morning, systemic risks, but also risks that are hardly measurable and hardly predictable, with a high potential knock-on effect. Well, the standard pooling and diversification mechanism of insurers and reinsurers would be ineffective in such case. And so risks could become uninsurable. Also, biodiversity loss could lead to the aggregation and the concentration of risks, leading to some operational consequences, such as low risk pricing or unanticipated high claims. If we take the investing activities of insurers and reinsurers, well, because of a lack of nature-related risk assessment and accurate pricing, this could lead to a hidden overexposure of financial portfolios to the goods and services provided by biodiversity that is declining. And so this could lead to credit risk, market risk, but also solvency risk and exposure to stranded assets, and eventually lead to some adverse financial returns. So, and unfortunately, today, unlike for climate change and catastrophe modeling, in which the insurance industry has been investing a lot, we're not yet able to forecast and model the materialization of biodiversity-related risk. As Bruno David this morning was explaining, there is an unpredictable part in nature that we're not able to forecast or to model. And this is also because of today a lack of data and a lack of understanding of the complex ecological interactions. So therefore, we're really entering a new era of increasing uncertainty linked to biodiversity loss and its consequences. And this is threatening the core principle of the insurance industry, which is to be able to assess, model, and price existing and emerging risks.
So we're entering a new era of uncertainty, as Jules just said, but there is one thing that we're certain of. It's that it's human activities that have triggered this vicious dynamic. It's our very own impacts that have caused those risks in the first place. So the first step to limiting these risks is to limit one's own role in the process, that is to review and restrict one's own impacts on biodiversity. So what could the insurers and reinsurers' impact on biodiversity be? Well, the very essence of the insurance industry is to provide other activities and businesses with the necessary means to run their own operations. They are enablers in the sense that they provide financial capacities as well as what we could call licenses to operate to other activities. So the insurance industry may have to finance or cover all economic sectors. Several institutions and entities have tried to rank and map which of those sectors pose the greatest threats to biodiversity. According to the UN Environment Programme, financial institutions willing to reduce their impact on biodiversity loss should concentrate their efforts on agricultural products, on distribution, on mining, oil and gas exploration and production, and oil and gas storage and transportation. Why those sectors? Because at least one of the production processes of these sub-industries is deemed to have high or very high potential impact on biodiversity, and because the financial flows they receive are particularly high compared to other sub-industries. But it is crucial to understand that any sector, any sub-industry might have impact on biodiversity, not only the ones shown here. In the report, for instance, we present the case of the fashion industry, which impacts the environment and biodiversity at all stages of a product life cycle. Even though their impacts are quite indirect, insurers and reinsurers can mitigate their impact on biodiversity by rethinking their own practices. And this can be done through the setting of science-based targets, the use of indicators and footprinting methodologies to assess the impact of the activities they cover or invest in, to select them in an informed manner, the mobilization of their entire value chain to engage their partners toward better biodiversity practices, or through positive investing practices, for instance.
So as we've just seen, insurers and reinsurers have potential leverage to mitigate the harmful impact on biodiversity. And along with mitigating these impacts, there are also a number of opportunities that insurers and reinsurers might find in addressing this biodiversity issue if done early enough. So we've identified three main categories of opportunities. First opportunity is to shift to a sustainable and responsible business model in order to sustain the insurability of existing and emerging risk, but also to ensure the long-term value creation of their financial portfolios. The second opportunity is to develop business opportunities linked to tackling biodiversity loss. And one example of this can be to develop some insurance products for nature. A good example of insurance products for nature is in Mexico, the development of the first ever coral reef insurance, which is a parametric insurance product. So this coral reef insurance is triggered if the speed of a hurricane in a selected geographical area exceeds 100 knots. And in this case, the insurance scheme would unblock funds to enable a brigade to intervene and repair and restore the damaged reefs. So this insurance scheme was not only developed for the own sake of saving the corals, but also because coral reefs have a very important role. They protect beaches and coastal infrastructure from erosions. And in this case, in the state of Quintana Roo, coral reef really sustain a 12 billion tourism economy. So we can really see both the interest of this insurance scheme for biodiversity, but also for the economy. And the third and last category of opportunities is enhancing the reputation and leadership of these companies at different levels, at the levels of their industry, at the national level, but also at the international level through, for instance, participating into the international environmental negotiations.
When it comes to reputation and leadership opportunities, the insurance industry has actually already started to take action in a related field, which is climate change. Along this presentation, it may have crossed your mind that the biodiversity challenge is very similar to the climate change one. While this is true and false, actually climate change and biodiversity, as was mentioned earlier, are intricately intertwined because on the one hand, climate change is one of the 5 main drivers of biodiversity loss. And on the other, biodiversity loss is an aggravating factor of climate change. An easy illustration of that is deforestation. But they are different challenges. Biodiversity is multidimensional and impact on biodiversity can be extremely localized. It is near impossible to compute one single indicator that would cover all aspects of biodiversity and makes it an even harder challenge to tackle. What's more, measures in favor of one could actually have detrimental effects on the other. Take the example of energy transition initiatives, such as the installation of large wind farms and solar farms. They can have harmful impacts on local biodiversity. So lessons learned from the climate experience are useful and necessary, but both are intrinsically different challenges which require different solutions. So they both need to be tackled simultaneously in an integrated approach.
You may have also noticed during the presentation that there are some large knowledge gaps that remains, and it is true. And we want to insist on the fact that overcoming these knowledge gaps will require partnership between the public and the private sector, between the academic and the business communities, because we're all interdependent in tackling biodiversity loss. And so to conclude, we want to insist on the fact that the business case for biodiversity conservation is progressing. However, we cannot afford to wait for the perfect indicator, the perfect economic valuation or tool. Today, action needs to be driven by the certainty of the unprecedented consequences linked to biodiversity loss, rather than being held back by the uncertainties regarding the concentration, frequency, or intensities of these consequences. Today, on the scientific side, we know enough to start mitigating all our harmful impact at all levels of the value chain. But biodiversity conservation is also not only about economic value, but also about the conservation of the intrinsic value of our natural heritage, which corresponds to the genetic diversity, but also the diversity of species and of ecosystems. So for us, the only way forward is through collective action, in which we need to develop an ecosystem of shared knowledge and shared practices, where the scientific community, along with the business world, works together to foster synergies with the natural world to lay the ground for a long-term oriented development model. So thank you very much for your attention. And as was said before, you'll be able to find the report online with much more details and example about what we've just presented.
Thank you very much.
Thank you very much, Jules Chandellier and Marine Malacain. I didn't have the opportunity to introduce you, so you're both members of the expert team of the Direction of Expertise of Muséum National d'Histoire Naturelle. And so thank you for the report. I would add that it's a very interesting read. So if anyone is interested, please go and check on the website. Maybe one question for you about what you said about the insurance dilemma. So we now know that a lot of risks that are linked to biodiversity are complicated to modelize, definitely, and you insisted on it at Mr. Bruno David ad. But at the same time, I mean, business model for reinsurance is to insure and to find some cases. So is there a business case today for some biodiversity business?
Yes. Well, so you mentioned the insurance dilemma, and so the insurance dilemma is the concept of, with an increasing context of uncertainty, mostly to simplify the two main actions that reinsurers and insurance can have is either to stop underwriting the risks that are getting too risky, or to increase the premiums to levels that would probably be not interesting for policyholders. And so I think that the business case for insurance and in reinsurance industry today is to find a third pathway between those two possible actions. And for us, this third pathway is to build all together between the private and public sector in mitigating our risk in order to decrease this uncertainty linked to biodiversity loss and to tackle biodiversity loss in order not to arrive at the point where reinsurers and insurers will have to choose between increasing premiums too much or stop underwriting some of their policy lines.